Welcome to this week's What's Affecting Oil Prices. I'm Jeff Quigley, head of energy markets at Stratas Advisors. Crude prices remain trapped in a narrow range, with Brent generally stable since the end of July. We forecast prices will rise slightly this week, averaging $53 a barrel with respect to the October contract. We also expect the Brent WTI differential will hover around $3 as Brent continues to outgain WTI. For the upcoming week, we are expecting crude inventories will see a draw of 2 to 3 million barrels as refinery runs remain strong. Geopolitics have proved supportive for prices, as protests at shale facilities in Nigeria have added to perennial supply concerns, resulting in the predicted collapse of Venezuela. The timing and manifestation of this collapse remains unknowable. North Korea continues to dominate the news, with disruptions unlikely but enormously impactful. The dollar fell last week on soft inflation data as the euro rose. Given that crude also fell, this is evidence that the inverse relationship is still extremely weak in light of overwhelming fundamental influences on crude. Therefore, we continue to see the dollar as a neutral factor. Trader sentiment will be a neutral factor in the week ahead as Brent has backed off of overbought levels. While traders remain sensitive to any negative fundamental data, the only relevant data released this week is the EIA Weekly Petroleum Status Report. Last week, the number of operating oil rigs in the U.S. increased by 3, according to the weekly report from Baker Hughes. There was little concrete news out of the joint OPEC-non-OPEC meeting last week, besides reiterations of the commitment level of deal participants. In general, with no new supply news, there is little to push markets down or up. Demand continues to help support crude prices. The IEA's report last week reiterated their bullish demand outlook, with reported numbers lending credence. Margins increased to record levels in every enclave last week, potentially leading to another week of increased runs. While there are reports that Chinese runs have slowed in recent months, they still remain above last year's healthy levels. Therefore, we see refining as a positive factor this week. This analysis is part of our short-term outlook. Contact us for more information.